Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Halloween, October 31st. Was a trick or treat for the market. It was definitely a little bit of both, maybe, as we saw a nice gap on the open, strong run up, and then really sold off quite a bit the last hour of the day, still closing in the green. But folks were definitely taking some profits before the day was through. That's for sure. So is this the bearish retracement we've been looking for? Well, I know we're a lot closer today than we were yesterday. So we will have to see. Of course, looking ahead to tomorrow's open, we still have plenty of earnings on the horizon. So we will want to make sure we are staying on top of that. No particularly enormous names, but certainly about 14 S&P companies coming out tonight and another dozen or so coming out tomorrow before the open. So still right in the middle of earnings season, no doubt about that. As we take a look at our overall market, it was one of those days, and I don't think it caught any of us terribly off guard. We've been waiting for a retracement. We've known we've been extended. I don't know how many people think this is the bottom. I think it's going to have to do a little more than it did today to convince me that it's the bottom. But the retracement that we've been needing to see, whether you think it's a bottom or not, we needed to see some bullish activity to get either direction going, right? So we definitely are a step closer to that. Here we are in the S&P 500. As you can kind of see, rallied well off the highs, very noticeable if you bring it down into a shorter time frame. Really the last hour of the day, quite a bit of selling off. We didn't close down, but we definitely kind of closed weak, I guess, to my eyes at least, as no one was willing to take and hold those profits overnight. Can't say that I blame them. Was able, interestingly, although not the end of the world, was able to close above that 9 EMA, which to me, of course, is the first sign that there's any sort of change in direction. But again, we've got a ton of overhead. We're still very bearish in my mind. Lower highs, lower lows. Let's see how we react if we break that intraday support, if we start to see some downward movement. Again, I really wouldn't mind us carrying this over into another day or two, but maybe that's asking a little too much in current market conditions. NASDAQ, nice bounce, really had a strong gap on the open here today, running up again, very similar to the rest of the markets, closing well off of the highs below its 200-day moving average. But again, we needed this one way or another. We were very extended to the downside. Dow actually briefly was able to break above its 200-day moving average. I thought maybe it was going to be able to hang on, but not today. Dow, not today, closing right below it, again, well off of the highs of the day following that last hour of the day selling off. And, of course, the Russell, which has certainly been the weakest, the longest at least, very similar fate, closing well off of its highs here today as well. So again, we've been looking for this retracement. We haven't seen it, kind of show us that it's over, right? We don't trust this market very much right now, probably for proper reasons, but we haven't seen it break intraday support or anything like that. Let's see what happens when we get confronted with that, whether it's tomorrow, Friday, Monday. I'm not sure. I imagine it's not too far away, but it's easy when it's moving up and not breaking intraday lows. Let's see what happens once that occurs. So we'll be keeping an eye on that for sure. But if you have been looking for some bearish retracement opportunities, you have to love today's price action because we desperately needed some stocks to move up to get some bearish retracements, right? Here we are over in the material sector. Nice little jump to the upside here today, but again, continues to be a very bearish sector. Overall, worked towards that old breakdown point. Not sure if we're going to make it all the way. Obviously, that's kind of where I would like it to kind of start to stall out, but maybe not get that. But up in there, it's going to be running into that 20-day moving average as well if it's able to push up through that. But really still remains very bearish, but a strong move is where pretty much we saw all over the place in the market here today. Energy sector too had a good bounce and quite a bit of sell-off off of the highs, actually closing in the red here today. after it was all said and done. Still, that support level keeps me from wanting to be bearish. And I understand the bearish argument, but that support level, just down here is I just think for me, at least, there's better looking bearish environments than energy, but I certainly get it. It's certainly not doing anything to get me to think it's ready to bottom out or anything like that. But that support level down there does concern me from a bearish point of view. And for me at least, holding that, I'm not really ready to go too bearish. Now, if we were to rally back up into those highs from back in through here, then I'd feel a little bit differently potentially. But as it currently stands, I do understand the bearish argument, but I don't see myself doing that. Over in the financials, had a very strong day, briefly breaking back above that old support level, ramming into the 20-day moving average, getting pushed back down and closing below. We've seen these candles before, right, where we have these long shadows or tails or wicks, whatever you like to call them, and then closing closer to the bottom of the range. The next day is the telling day, right? If we break intraday low or break today's low tomorrow, that's going to be a continuation of that downward movement that's already started here today, right? But if we don't break through it, no big deal. It was just some people taking some profits, right? So I do think from a very general point of view, how we, start today or tomorrow is going to be very telling us whether or not we're ready to have these bearish retracement opportunities, or at least the market thinks we're ready, or if we got a little more room to run. Certainly, we do have more room to run, still very extended. It can take a little bit more than a 1.5% gain on the day to raise that. Very similar situation to financials over in the industrial sector, running up, selling off the highs, and kind of closing right back down at that old support level, just a little bit below it. So once again, I think how we react to this going into tomorrow is going to be very telling, but certainly not a very impressive area. From a bullish point of view, that's not a very pretty looking chart. It seems to be, if you're going to take a shot, to me, it seems like there's better places to take it than the industrial sector. Over in tech, pretty strong day over there. But again, much like the overall market, selling well off of the highs, looming right below the 200-day moving average. And for those of you that use this as an indicator, not too far away from potentially having the 20 cross below the 200 as a sell signal. Obviously hasn't happened yet and may not happen at all, but we still have quite a bit of overhead, and we're going to have overhead no matter what we're looking at from a sector perspective because, well, we've got a lot of resistance to climb through to work our way back up, right? Over in staples, really wasn't able to carry yesterday's momentum, breaking through that high point. Never was able to break yesterday's high today, selling off of that resistance level. I do think that from a bullish perspective, it kind of, and if you're not in it, at least if you're in it, well, this isn't a favor, but if you're not in it, I think from a bullish perspective, I do think it gave us a favor for a potential entry if we break what is now 2 days worth of intraday highs. So that would be, in my estimation, the buy signal on the break side. Obviously, when we get a pullback, we did bounce really nicely off of the 9 EMA over in the staples sector today, kind of caught our bottom there, kind of the reverse of the overall market with the wick to the downside instead of above us. But that resistance is a big deal to me, and I really need that to be out of my way or be a ways away from it before I'm too excited from a bullish perspective, because that resistance, we did close above it yesterday, but we've seen time and time again how tough that has been on this sector. And with it getting pushed down today, I'm going to want to make sure, like I said, a deeper pullback, I could change my opinion, but as it is right now, I think my evaluation is you break above that 55.50 resistance zone to get a little bit of confirmation. Utilities hold back, another back and forth day over there as it continues to decide if it wants to hold this little short-term uptrend or if that longer-term resistance is going to win. Don't think we got any clear signal of which is the site to be on here today. We do continue to hold on this general rough trend line that you see that I've drawn here. It's not perfect by any means, but in that general area, we do continue to move off of. Really, to me, the 53, as long as it holds 53, I'm okay with being a little on the bullish side of things. If we were to break that, well, that break of support would be a confirmation of a failure, at least for the short term. So 53 for me on utility is kind of the line in the sand right now. I would understand people buying it in here. There's a little bit more room today than there was yesterday between, what appears to be support in form of this little trend line and, of course, our overhead resistance. Certainly not a very strong confirmation candle today, so I wouldn't be thinking tomorrow's the day to do it. But as long as we kind of hold this, I am okay with a moderately bullish outlook. But as I was just kind of scanning things, and I was pretty busy today, but I was kind of noticing a few of the utility stocks I ran into scanning were breaking support levels. And so I don't know how great I feel about that. Now, it was very few. I didn't look at a lot of utility stocks, so I need to do a little more of a thorough analysis. But just what kind of caught my attention is breaking support on some of the S&P 500 utility stocks. That definitely doesn't bode well if that's a broader theme. It might have just been the couple I was looking at. I'll have to take a closer look. Healthcare, nice little bounce on the open. Did sell off a little heavier than some of our other areas. Overall, one of the only areas actually holding is 200. So I do think there is some relative strength within this sector, and I'm really okay with not being super bearish. This probably won't be an area that I'm personally looking at bearish retracements in. That doesn't mean I'm right. It doesn't mean I would not be opposed to someone taking trades in that area, but I have been impressed with its relative strength as a whole. Again, things like materials, finance, things that have been showing discretionary, they've been showing more weakness. Are probably areas I'm more likely to look towards. That doesn't mean I wouldn't potentially go bearish in the healthcare, but probably wouldn't be an area that I was focusing specifically on to look for those opportunities. As we move into our discretionary, that could be an area I'd be looking for. We kind of ran back up towards that old floor, broke through it, and closed down below it. This area also looks like an interesting, a lot of areas look like a bearish retracement area. So while my opinions are my own, you may or may not agree with them. This definitely fits the bill, right? As far as that goes. Again, we're going to have to wait, see how we develop going into tomorrow. But we wanted that retracement. We're definitely getting those opportunities. And over in real estate, knocked down off of that 50-day moving average here today, sold off pretty heavily as a result. I continue to not feel great about this sector, and it might just be a me thing, but I continue to not feel really good about it one way or another. We're seeing a little bit of conflicting signals and short-term momentum, making those higher highs and higher lows, but we do have the longer-term downtrend. We do have the 50-day moving average to deal with, and so, again, I kind of think, for me at least, how it develops at this 50, and I'm willing to miss the next trade if it means I get to see this. That's what I want to see. Do we get pushed back down from the 50, break some support? Do we break through the 50? That would give me a little bit more clarity, and I'm willing to wait and see which side wants to win before I make a decision on this area. But, I could see both sides. That's the problem. We've got the short-term momentum, but we are, of course, haven't really done anything to set the world on fire. We do have that 50 looming right above us. So when I can see an argument for both sides, that usually means staying away is the play, for me at least. We did bounce up. We had Facebook come out with earnings and respond positively today, probably prompting a little bit of upward movement here in this communication services sector. Back into that, that bullet or bearish area, kind of the falling 20, falling 9, not into the 50 yet. Continue to be overall in a downward trend. I do think this could be an area I could find some interest in as well. Has been a little bit more volatile than the rest of our volatile areas, so that is something to keep in mind if we are trading within this area. You've seen a lot of movement in some of these stocks, but definitely, a doji in what I consider, at least for me, the bull or the bear area. The first area is going to be between that 20 and that 9. So a doji in between that bearish area, at least that I consider a bearish area, is definitely a signal that's got my attention going into tomorrow. Again, with all of these things, with trading in general, we always want to get that confirmation, right? I need to see that break of support if I'm going bearish, break of resistance if I'm going bullish. A lot of times that's going to be today's high, today's low. Sometimes it can be on the intraday. We definitely haven't seen any confirmation, but we've seen some things that, hey, maybe we're getting this development as we close the week out. So pretty interesting way. I didn't mind the way the day played out. Dollar remains strong, pushing up a little bit more, taking out that 97 at 97.10 here. Again, very strong. Don't say this a lot, but pretty extended to the upside, at least these days. Pretty extended to the upside. If you're here, you're probably very happy and just kind of moving your stop loss. taking out resistance, showing a lot of strength. If you're not here, you're probably looking at watching for a retracement to develop in the days to come. Certainly no reason to think that this is the time to be bearish on the dollar, breaking resistance, making higher highs and higher lows, showing it a lot of strength, but is very extended. It's not unreasonable to ask for a pullback in the relatively near future. So if you're here, you're probably pretty happy and are just probably trailing your stop loss as you've been since you got in off of the bounce or off of the original breakout. If you're not, you're probably just watching for a pullback opportunity to see if one develops going into probably next week at this point, like a couple more days in the trading week. So I guess it could happen by Friday, but I wouldn't hold my breath. We'd have to kind of really, I don't know what we'd have to do. Probably can't happen for my own personal rules. So taking a look over at our metals today, gold dipping down, getting back to and actually below that 1220 area as it continues to build off of that selling momentum from yesterday. That 1220 is kind of an area. That's the number that a lot of us, myself included, have given it, but it is certainly an area, in my opinion, as long as we're above the 50. I mean, I would want to, buy today. Buying off the 50 would make some potential sense. Once we close, if we were to break that 50, I think it would be pretty clear whether you're calling it 1220 or 1217 or 1222 or 1215. By the time we break the 50, I think we would all agree that whatever this breakout point was had been violated. So as long as it stays above 50, I will not be bearish. And I would certainly be open to the idea of a potential turnaround here in gold. Obviously, we haven't seen the candle to confirm that just yet, but I'm definitely open to that as long as, like I said, it doesn't have to hit 1220. It's nice when it hits the exact number and I get to feel really smart. But as we know, so often it's an area, especially on things like gold futures. So as long as we kind of hold this, I am open to a pullback. That breaks, I will be taking my bullish bias and taking it home with me, at least for the time being. So that's certainly the line in the sand for me. Copper was looking as a potential bullish opportunity yesterday with that doji. Never showed any upward momentum. Wasn't able to take out that previous high. So no big deal. If you were interested in silver last night, probably didn't get into it. At least you're following your rules. So no big deal. Now we're kind of right back at that old breakout point. Obviously, very bearish candle today. For me, this bottom here really is the line in the sand from that bearish perspective. Again, much like gold, this is kind of an area. We're kind of hanging around there. Let's see how we develop. If this falters through here, again, I would expect it probably not hard to fill this up all the way down to the bottoms here. If this area holds, I won't be surprised either because we've been pretty sideways, right? So we're down. We're not seeing great things in the metals here today, but I don't think we've seen clear turnaround signals in the metals today either. At least I haven't. Natural gas, another solid day coming off that support. I've not been trusting that support level lately. I've been respecting it, but I've not been trusting it. And well, I kind of wish I have been, but such is life. I can live with passing. I just not a crazy person most of the time. So I'll realize I should have trusted it. We're working our way closer and closer to that resistance. Obviously, we're going to want to keep an eye up in that 330 area. That has been kind of the turnaround point on multiple occasions. Still pretty good, solid looking chart, no doubt about it, but certainly we are sideways. We are nearing the top. So if we start to see some profit taking, don't be terribly surprised because all we know for sure is that we've seen that on multiple occasions in this general area. We've got a little ways to go before we're there, but certainly keep an eye on that ballpark 330 area. And we're close enough that, I would call it, we should be paying attention to it. I haven't really changed my opinion. If we do get a breakout, that would be a continuation of the upward move that we've seen here today and the more upward move in general we've seen over the last few months. We know where our important numbers are, right, on natural gas. Today was a good day, and if you were there, you were very happy. But, really our numbers are the same. Resistance is the same. Support's the same. Nothing has changed from a technical point of view over there. And lastly, crude oil continued to fall here today. No surprise. We knew that it was not a particularly great spot. We knew that if we were going to do something, bearish was the side to probably be betting on. We're getting closer and closer to that support zone. Some people are calling it 65. Some people are calling it 64. I'm calling it somewhere between that ballpark. We're getting fairly close to it. That, in my opinion, is potentially a major level. If we take a closer look at a weekly chart, it will illustrate that point a little bit more clearly, maybe why that is considered an important level, at least to me. We tested on multiple times. If that breaks, that's going to look a heck of a lot like an M pattern if that support level alters, which of course is not a bullish pattern, right? I'm going to respect it. It's held, and again, I always will respect support and resistance. Just because I'm not betting on them doesn't mean I'm betting against them. That's for sure. But I do think that's kind of the number that we want to be looking at, but still showing, a fair amount of relative weakness over in the energy market and the crude in particular right now. So pretty ugly looking chart, at least as of today. Really quick here, I know what that's going to do is for the market recap, but just a quick note for anybody looking for trading opportunities. An easy way to find things if you don't have things in your watch list is to, of course, move into, we're just right back over here on the tackle trading market skyline, right in the FinViz. Personally, I always start with the S&P 500 as my universe. You can do whatever you like. You can go by market cap. You can go by, dividend yield if you want to. I don't know why you do it as a trader. So, of course, you always want to make sure you hit your volume threshold, which for me is over 1 million shares. But just using basic materials as an example, if you are looking for bearish opportunities within that sector, and again, just using that as an example, you may or not, maybe agree with me, maybe you don't. But a very easy way to kind of browse through, I'm looking for some bearish retracement opportunities in that sector. For right or wrong, that's something I want to be taking a closer look at. Easy way, just build your universe, whether it's S&P companies, large cap companies, mid cap or bigger companies, whatever your volume threshold is. For me, it's always over 1 million at the bare minimum. And you can just very quickly and easily, hit chart, hit basic, whatever you like to do, whatever works best for you, and just take a quick stroll through these stocks and see if any are looking like they're interesting for you, whether they're kind of matching what you're kind of thinking. Quick, just bird's eye view NOV, for example, rallied up. I obviously can't make a trade off of this chart, but I could say, yeah, that's kind of interesting. Maybe I'll take a closer look at it, see if there's something there rallied up off of that recent low. So we can kind of see if there's anything within these areas, whatever they might be, whether it's materialized for you or not. This is a very easy way, in my opinion, to be able to browse through things, whether you're looking from a bullish or a bearish perspective, without going crazy. You can look at a lot of stock charts really quickly. Things catch our attention. Great, we can go take a closer look at them. If they don't, no big deal. We can move on with our day. So if you are looking for trades in any particular area, I found if you don't have them in your watch list or whatever that you're following on a regular basis, that's a great, easy way to be able to quickly and effectively browse through some charts for some new trading opportunities. So hopefully that can help any of you who might be having a hard time finding new trade setups. With that, ladies and gentlemen, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell if you haven't already. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're following during the market day. If you enjoyed the market recap, it's always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track here. Should be fun. Should be an interesting end of the week. So get out of here. Happy trading, and I will see you all in the next one.